Well, well, well. Hey there. If it is not Tuesday, it is Tuesday. And the old markets be opening today again, once again, on the old traditional markets of the United States. Right? Your Dow Jones, your NASDAQ, all those things and more. Trad markets are back. It is now the day after Labor Day. Trad markets are opening in another however much time today. And if you're looking at the Bitcoin crypto markets, you'll notice that they've opened this daily candle with a not so stellar looking profile in terms of the volatility and the entropy and the probabilities and statistics. And I say not so stellar, I mean not looking so hot if you're looking for the assets, in the top liquid area to be looking strong for the long. And right now they're not. They're looking a bit more, a little bit more humble and even to the downside. Overall, there are some indications, though, that there are some moves to the upside in the offing. And certainly on lower time frames, we're seeing that. And we're seeing the very probable moves to the upside happening on very low time frames. We've seen that already. Right, earlier today, Bitcoin, for example, went up to 59,000 and change, approaching 60,000 before coming back down. And when I last looked at it, maybe a half hour ago or so, it was in the 58K zone. Considering it went down to somewhere in the 57s over the weekend and popped back up to over 59, that's not a bad move. 2% down, 2% up kind of thing, or 3% down, 2.5% up. Not terrible. But last I looked, it was actually a little bit above, or right where it closed out on Friday. Where traditional markets closed on Friday. So you're going to have people making noise in the peanut gallery, as they usually do. Oh, there's a gap, there's a gap. And then they'll play that gap wrong, right? You don't play the gap by trying to front run a move that will have your order sitting at the gap. You play the gap by looking at what the VEPs are telling you. It's really that simple. You don't need to guess, is the asset going to go up or down, when the VEPs are literally telling you it's going up or it's going down, right? So the issue is that if you don't use the tools enough and you don't trust the tools to do what they do, then you're not really going to know that it works the way it does, because you won't have tested it enough. If you do test it, and by test I mean run trades, whether you're running virtual ones or ones for real money, doesn't matter. You run trades, right? Notice where your entry is. Write it down if you have to, whatever. Usually it's on your screen in front of your face if you're using a modern trading system. But if you're just running paper trades, just write down your entry. See if it gets filled. right? Because you're running limit orders, hopefully. See if it goes towards your target or away from it. Right? If it's going away from your target, get out of the trade. There's no reason for you to keep losing money. Just get out of the trade and recalculate. Go back to school on your VEPs, right? Go learn what you obviously did not. Right? Why did you misread that information? It should be very clear to you before you run the trade what direction the asset is likely to move in from the time you run that trade to the time you get out. Even if it zigzags its way there. It should be very clear to you just based on the volatility and the ALR and the AVQ. Okay? If it's not clear to you, you need to wait for the next occurrence of opportunity when it is clear. If you want to know how it can be clear, just look at the tendencies on the cheat sheet. There's a reason we give you that cheat sheet for free. Right? So you can learn those tendencies. It's not an accident that we give you that information. It's not an accident that we give you the indicators that we give you for free. We give them to you so you can learn to trade with volatility, probabilities, and statistics to get a taste of what our tools are capable of, because those are the really basic fundamental ones to know. Once you know those, the rest is like supercharging your, it's like getting going from a basic car to an exotic sports luxury car kind of thing. And the idea is that you want to be able to use the basic before you use the advanced, right? As in all things. If you're not capable of using a basic thing before you try to use an advanced thing, how do you think it's going to turn out for you? Like, typically. Anyway, so the markets come back today. And should you expect them to be rip-roaring and amazing? And like just everybody's back and it's let's go time? Or should you expect people to kind of slowly get back into their groove? Well, given the way the markets have been going for most of this year at this point, right? With the VEPs, obviously, I would say continue to look at the VEPs to give you a clue on any particular asset. Are things going to slow down because of political cycles? Well, who cares? It's moot. No, things are not going to slow down because of political cycles, and things are not going to speed up because of political cycles. Things are not going to slow down or speed up because of whatever news story you read, even if it's some big earnings report or profits reported or losses reported. None of that makes a bloody difference when it comes to trading. Okay? I mean, none of it. You might think it does, but if you think the smart money relies on information that's already been reported, edited, and published to retail traders, I mean, you must be kidding yourself. Do you think the smart money sits around and actually watches CNBC or Bloomberg TV or Fox Business to get a sense of what to invest in? I mean, are you kidding? You think people who work at HFT yeah, sure, maybe they have those things on in the background because entertainment, right? Because they get a laugh out of it, or they know it's good for the camera shots if anybody ever comes to their firm to film a documentary. They put those silly channels on in the background, muted. So it looks like they're always watching financial news. Yeah. What do they watch when cameras aren't on? Like, what are they watching? Cartoons? Netflix stuff? What? Oh, is it loud here? Okay. Got a bit of an engine there. Little motor running there. Involved in some urban landscape engineering. Anyway. Okay. Yeah, that does not look like it's supposed to be happening. Some guy who works for the urban landscape engineering, using the water resources to wash his own car. Yeah. You want to know where corruption is? That's what corruption looks like. Like, whatever, not a big deal. Let it slide. Not a big deal. Guy's just spraying his own car. Or he's using water resources that he's not supposed to be using without a permit, without paying for it. Not a big deal. Sure. But do that 50 times a year for yourself and another 50 times for your buddy, another 50 times for someone else. Pretty soon you're using up quite a bit of water that you're not supposed to. But whatever. I'm not going to complain about it. Just pointing it out. And the reason I don't complain about it is because the bureaucratic process involved in doing that for the likely end result of, oh, well, whatever. We don't care. It's not worth the headache, but I still point it out because that's what real corruption looks like on a day-to-day level. Right? People grifting small things one way or the other. Does that affect the markets? You bet. How? Well, when it comes to traders at smart money companies doing things like that, small things that are corrupt, that add up. Those are the things that add up, that make a big difference, right? Like that guy many years ago from UBS, who's a trader, lost a ton of money on his own. Kept covering it up with money from different accounts. He was basically scheming his own employer or the company he worked for or whatever, and drove them, into huge debts. Also, that guy from, I think, Barclays Bank famously lost them a ton of money. Do those things affect markets? Yes, temporarily they do. Sometimes even for a long time, right? That's why people got to go back to school, so to speak, on the rules of trading, like what you can and can't do. And sure, understand that crypto is not regulated for the most part, but there are still rules, right? Various exchanges will have different rules that you must follow. They'll have different levels of KYC AML. They'll have different amounts you can use, withdraw, etc. Different amounts of leverage available, different amounts of all kinds of things. So it's not as if there are no rules in crypto. If you're using centralized services, right? Using centralized services, there's actually plenty of rules. So learn them and learn how to trade the VEPs, because that's the most obvious way to be consistently profitable with your trading. On that note, remember you can join the Alpha Trading Discord for free. Just go to alphatradinghq.com/discord. Again, that's alphatradinghq.com/discord. And you can go to our servers starting at 9 a.m. US Eastern Time to catch our live streams, because that's when they happen. All right. Happy trading. See you there.